What's up, legends? How are we all doing today? Welcome to the start of a new trading week. Hope you all had an amazing weekend. Look at Bitcoin trying to close us a little bullish engulfing over there. Is it a fake out, or are we going to tap on that 50k region? That's what we're going to get in today. I'm going to go through higher time frames. We're going to talk about the RSI. We're going to talk about high block and trading light as well. And guys, don't forget, if you don't have your own trading light subscription and you're looking to get one, there is a link directly to the website in the description of this video below. Trading Light is Heatmaps software that shows you where the highest ranges of limit orders have been placed and helps give you an edge on your trading. And if you've been watching me for a while, you'll know that we use it a lot in this channel. So on that note, if you're new here, welcome. If you are returning, welcome back. Don't forget to hit that like and subscribe button and turn the bell notification to all so that you can be notified every time I upload a new video. Now let's get into it. So before we talk about Bitcoin, let's just take a big overall view at what is going on in the markets. Up here on the left, we can see Bitcoin has held that previous resistance and flipped it into support really well. We're going to talk about that. Ethereum has also broken the W, retested, and looks like it wants to take the next leg up. We're going to talk about that. USDT dominance has been the one to watch. We've been holding the support for 8 days now. So on the USDT dominance gives us a hint of where the money is shifting in crypto. So if the USDT dominance breaks this support and heads down, we could expect Bitcoin and altcoins to potentially take another run. However, if we get a strong bounce of this and it pushes up, it means that people are shifting into safety and we can expect Bitcoin and Ethereum to come down. So this really is a key one to watch right now. And on that note, I also want to have a look at the Bitcoin and Ethereum dominance. So Bitcoin dominance is put in a lower high, but could potentially be creating a higher low where we are right now. So if the dominance holds here and continues up to create some sort of a trend here, then we would expect Bitcoin to be gaining strength in the overall crypto market as well. Ethereum dominance is performing super well, looking like it wants to come up and test its previous resistance levels. Could this be forming a rising wedge, however? That's sort of something that we have to watch out for. Not exactly formed yet, but I would be watching on the Ethereum dominance, something like this. And that's actually going to line up with a key level on Ethereum that I want to talk about today. So, all right, moving back into gold, looks like potentially not going to form that flag that we were hoping it would, but it does look like it's currently creating a little bit of a descending triangle, so we could still break out to the upside on that one. S&P is moving up nicely, had a nice little retracement there, but seems to be trending up, has created a higher high. So if the overall stock market is looking good, that will allow crypto market to do what it wants to do. And Dixie is still stuck in the same range. Okay, let's go take a deeper look at Bitcoin. And so what I want to talk about with Bitcoin is the W pattern that we were talking about previously that broke to the upside here, and then this came back to retest it. Now, at the time, we were expecting a deeper retracement because we'd have such a big move up. This doesn't seem like as much of a healthy retracement as what we would expect after such a large move. So will Bitcoin come back for a bigger retracement, or has it now flipped that 44,900 area into support? That's what we're going to try to work out. Now, if it has in fact flipped this into support, then the next area to talk about is this area here. And that's coming in at around the 50k to 51,400 kind of level. And if price were to push out now and tag that 50k level, that would actually keep it within Bitcoin's current channel. So when you turn that channel on, see how price has pushed up, come back to retest the dotted line. So that's the halfway mark of the channel. And now looks like it wants to put in a bullish engulfing. Anything that stays above the dotted line is considered bullish. Anything that breaks below is considered bearish within the channel. So considering we've had two bounces off this dotted line now, it's seeming fairly likely that we might come up to tag the 50k. So the question we have to think about in this area is, what is the market maker's objective right now? What do they need to encourage us to do? Do they need to encourage us to go long, in which case they'll put in a powerful bullish engulfing candle, get us all to open long positions and then increase our leverage before they send the market the other way and take out all of our stops and liquidation levels? Or do they need to encourage shorts? And we're going to see that on the high block, but I want to stick with the charts for a second, because what I want to point out about this that immediately stands out to me is that even though this current daily candle is looking good, the RSI is currently doing the reverse of a slow bleed. So this here is what I call an RSI slow bleed, where over a long period of time, RSI creates lower highs regardless of what price is actually doing. The RSI creates lower highs that start from overbought and slowly trickle their way down into oversold. When that happens, you usually get a sharp move out, at least to the 50 line, sometimes back to the overbought line. Now, I haven't named the reverse of that, but this here is currently looking like it could potentially be a reverse slow bleed. So we've gone from oversold down here. We've hit the overbought once, but we've come back. But what I'd be really looking for now is to see if we get back there, but actually create a bearish divergence. Now, I'm not saying that's going to happen this week. Like, I am looking at the daily time frame right now. So this could take a couple of weeks for all we know. But if we were to get a daily bearish divergence after having a reverse slow bleed, wherever price is at the time, if it's also hitting a key level of resistance, that's where I think the reversal is going to come. And this is based on the daily time frame. And if all of that were to happen, it would make sense that price would come up, tag the 50. So if it did come up to tag the 50 and we got a bearish divergence on the daily, that's where I would be looking for rejection. That 50K level is also, I believe, the 50 fib level from the previous all-time high. Yes, it's right on the 50 fib level. So it could be possible that maybe this week we do get a bit of a run up to 50 and then potentially we get a midweek reversal that either just brings us down to the 50 line of this channel or back down to the bottom of it, or if it's dire, we create new lower lows. Now guys, don't forget, if you're enjoying this content so far, please smash that like button, hit the subscribe, and also leave me a comment down below, as it really does help to drive the engagement on this channel and help to get more people aware of how we trade over here. Now, on the 4-hour time frame, if we connect these highs and these lows, then all we have right now is a symmetrical triangle. Now, on my last video, we were in this area here looking for shorts. We did catch this short in my Discord, which was great, and we actually bag flipped it long as well at the bottom here. We did that off the 15-minute time frame, which I will show you just quickly. So we got this short here based off the order books. At the time, there was a total of about 2,000 BTC worth of short orders in Binance alone within a $200 range in this wick. So we caught that short. Once we got down to here, there was 1,000 long orders, which is really quite large. If you're used to looking at trading light, you don't often see 1,000 in Binance. So we bag flipped here for that reason, took a bit of a chance on it. The target was just the 38 fib, so it was around here somewhere. So some of our TTC members may have got a little bit more out of that, but I did close at the 38. So I think we had an 8. After that, however, when you zoom out, and this is why it's really important to zoom out, especially if you trade smaller time frames, because you can get stuck in your little hole of thinking that one move down is going to create a bear flag and take a further move down, but it could be just a move down to tag the bottom of a higher time frame triangle or a support level or something like that. So always be sure to zoom out even if you're trading shorter time frames. So looking at where we are now, we've tagged this trend line many times. So whilst this price action on the daily looks like it wants to close as a bullish engulfing, I'm filming this 47 minutes before the daily open. So on the daily, it looks strong, but when you look at the 4-hour, it's still within a symmetrical triangle. So what I'd be waiting for on the daily open is I want to see if we actually reject this level a little bit. If we reject it, create a higher low, then I would expect that further push out to the upside. We could also just push right out of it now, but even if we did, the risk to reward on taking a long on a breakout from here is probably not going to be that good. Say a 1.6 to 1 risk to reward. Depends if that's in your trade plan or not. It's not in mine, so I wouldn't be able to take it. But if we could get a higher low formed within this triangle, that would be a better spot for me to take along. I would take it within the triangle. As long as I got something like this, a nice bullish looking hammer would do it for me. Then I'd have a much better risk to reward. I'd only need to have my stop below this wick and I could take it up to here. And now I've got a 5.4 to 1 risk to reward. So that makes way better sense to me than trying to catch a FOMO breakout. The other thing we've got to be very careful of is this being done on purpose to encourage us to long? Because right now people are bullish. So for as long as we're within the triangle, we also have to be prepared that price might come down, test the bottom, create a lower high, and then break down. Now that might sound like, well, it might go up, might go down, and that's true, but that's the point of a symmetrical triangle. If a symmetrical triangle really squeezes tight into the pointy end of the triangle, you have a very easy trade because you don't have to create a bias. You can just trade whichever way it breaks out without emotion. Now, the other thing that's adding to my thought that I think we might go up before down is when you have a look at the RSI on the 4 hour, after we had this big push up that we talked about on the daily, and this was the only retracement that we got out of it, that retracement brought us back to oversold on the RSI. And that was a tiny move in comparison to the push up that brought us into overbought. This little tiny move brought us back down into oversold. So maybe this is the new support. However, we still do need to be cautious of it. The other thing too is have a look at these EMAs right now. This is why price action is very difficult to trade at the moment. See here, the EMAs were trending up beautifully. Now they are horizontal, completely horizontal, which is what happens when you get into the pointy end of a symmetrical triangle anyway. But when Bitcoin is trying to make its decision on a higher time frame and it's fairly neutral, so you would call this neutral because the EMAs are sideways, then it adds difficulty to trying to trade it on a shorter time frame as well. So I'd be very careful. I'd probably really only try to trade the market opens. So Asian open in the next hour or so, London later tonight, and then US after that. But if you don't get your trade over and done with in a couple of hours, it's probably not worth sitting at the computer all day, in my opinion. So now that we have this in mind, let's just have a look at high block and see if we can get a little bit of a hint of where the leverage is at the moment. Okay, so first of all, having a look at this over the last couple of days, we have consistently switched between greens at risk to reds to greens to reds. So when the delta is switching like that, it kind of adds to my reasoning that Bitcoin is in its make its mind up mode. It's in that triangle, make its mind up. At some point, the market maker is going to try and encourage us to go one way. So I'd be very careful. I'd be watching out for a big candle with a big move that breaks out of a key level. Now, whether that breaks out to the upside or the downside, leverage isn't telling us anything right now. Market maker needs to encourage more leverage. What's the easiest way to encourage retail to take on more leverage? Well, you have to look at where their sentiment is. So if retail is more bullish, then the market maker is probably going to encourage longs. Retail is bearish, they're probably going to encourage shorts. The best way to figure that out is to just scroll through Twitter and see how many people are calling 200K and how many people are calling 20K. And the other thing we can do is have a look at the fear and greed index, which is currently sitting at neutral. So it does look like everyone is sitting on their hands right now, which means a market maker is going to have to make a move because a market maker only has 3 objectives. Number 1 is to induce retail to take a position, right? And they do that by sharply moving price in a direction. And then their second objective is to create panic and fear to make you think irrationally. So when that sharp move comes, what do you think? Oh, I missed a move. Should I just jump in now? Is it going to keep going? I don't want to miss out. All those sorts of thoughts. They know you think like that. And that's what they do. They make the sharp move to create that panic and fear. And their last objective is then to hit your stop losses, because by hitting your stop losses, they pocket your money. And they hit stop losses by reversing markets. So right now, if the market is generally neutral, they have to get you to FOMO in a direction. And all we have to do is sit here, be patient, and wait to see which way they're trying to take the market. Don't try to trade against the market maker, trade with the market maker. That's how you make the most money. If they push us out to the upside, that's when you come and have a look at Trading Light and you have a look for these sorts of levels here that stick out, large red ones. We can see here 11 million US dollars worth of shorts are sitting there at 48,350 right now. This is on BitMEX. So in case you don't know what I'm looking at that red square. I can't move the mouse because it will take it off the screen. But that red square that says 11M is 11 million US dollars worth of short orders sitting at $48,300 at the time that I'm filming this. Now, why does that one stand out? Because when you look either side of that number, see how we're down to 112K, 130K. The comparison is massively different, right? So is it likely that the market maker will drop drive price up to that level, because that's where he's got shorts waiting. Because at that level, let's look left, that tags are just above here. So what happens is retail waits for a resistance break. That's when they go long. Right above that, market maker is waiting to short your longs, take out your stops, and make bank. So let's mark out that 48,350 level. And now you can see it a little bit clearly. See how that short is right above this previous resistance here? That's what you need to be careful of. If we do break out from this triangle here, very lucky that I said to you that this would not be a trade worth taking, because the risk to reward would be terrible. Now you know you're actually at risk of not getting to 50K. You're at risk of only getting a little bit beyond here. The risk to reward is even worse. So if you're a new trader watching this, I hope that the message is becoming clear not to FOMO into big candles. These are all done by design to make you think that, the next level is going to be 55, 60K, you better get in now. When the reality of it is, behind the scenes, they're just playing with your emotions. So let's have a look at Binance, see if we can get a level that matches up around there, because that's going to add confluence to that being the level to watch out for. And currently there's nothing all that big on Binance. Binance is the one that I watch more. We do have 47,550. It's not that huge right now. Looking in the actual book, see up here at 50,200. Sorry, it's moving fast. 50,200. We've got 400 there. That's 400 BTC shorts there. But I have a feeling that that's actually a liquidation level, because it's been there before for a really long time, disappeared for a while, maybe because price was coming down, and now it's back there. So I definitely want to keep an eye on that 50,200. But before that, we've also got this 47,700 at 214 BTC worth. So we'll mark them both out. Okay, now that we can see those levels clearly on our chart, you can see here that this is the level that the bears are going to try to defend. I like to see confluence between both BitMEX and Binance. That gives me more confidence. There's a little bit too much of a range here. That's about a $350 range. When I can find them only a couple of $100 apart, that's when I think that's definitely going to be the level that we will reject. This is a little bit far, so it's hard to tell which one. But also BitMEX at 11 million shorts is very, very high. We also don't often see that either. So yeah, I would be very, very careful of a potential fake breakout of a symmetrical triangle, because the way that most people would measure out the target for a symmetrical triangle breakout is they take the start of it like this, and then they move it up to the breakout, and then as you can see, that puts us right in the target zone. So could be playing with emotions to get us to have a little breakout, encourage longs, short us up here, and if not, then definitely the 5,200. It could also be that we get a rejection that creates a higher low from these shorts, then we go up to this level. So definitely watch the market structure. When we do finally break out of this triangle, watch the market structure closely. When I see orders of that size, for me, I won't take the long breakout, but what I will do is jump to the smaller time frame. So I'll probably be looking on the 15-minute time frame for today, or the 5-minute, and I'm going to actually look for an M pattern reversal at around this level to short it, as long as I get the right confirmation. If these orders disappear, because don't forget, the orders that are in Trading Light are only limit orders, so at any time people can just delete their order. And especially on BitMEX, there's always game playing, so it could be that maybe this 11 million is sitting up here to encourage us to open shorts. As soon as we get to say 48,250, they might remove those shorts and price will just shoot right through. So you've got to be very careful of that. There is an art to understanding the order books. If this is fascinating you, stay with this channel, because I will show you everything that I've learned over the years. Once you start to watch order books over just watching normal technical analysis, you really start to learn what actually moves the market, and it gives you such an edge on your trading. So in the meantime, just be mindful that even though I'm saying 48,300 is the area to watch because of those orders, you need to watch price action at the time. If you're not using Trading Light, then a big strong candle like this that's currently happening, or even this one here or this one here, a big strong candle like that pushes right through that zone, that's going to give you a hint that those were spoof orders that actually got removed as price got closer. But if you do have trading light, you'll be able to actually watch this and see them go at the time. The fact that it hasn't moved at all yet in the entire time that I've been filming tells me it's not a spoof order. But again, we do need to double check things as price gets closer. So in comparison, I probably want to see about 1,000 on Binance at the similar level to what BigMex is doing. And I'm not seeing that anywhere here. So Binance having much larger volume than any other exchange, it really is the key one to watch. And I'm not seeing huge shorts until we get up into this 50, 200 kind of area. So we need to keep that in mind as well. Not sure if you happen to see that just then it flashed red and now we have this wick. So it goes to show that those little red areas, they're the ones that show you that the orders are super large. When we look below the current price, see how much red there is between 45,900 and 46,000. So that just goes to show that we're really trying to push price up right now, because even if this green candle closed and we had a bit of a retracement, it doesn't look like they want to let price go below 45,900. And so then if we look at our chart, 45,900 is the middle of this triangle. So maybe on the daily, once the daily opens, we might get a pullback to here, then out to there. There could be a little day trade to that level, but I'd be very careful of these shorts up here if they're still there. If they disappear, then we're watching for the 5,200 level next. All right, let me just quickly go over Ethereum now. Now, Ethereum on the daily has been sitting in the overbought region for quite some time. We are still within this channel. It is possible that we trickle up into this supply zone up here at around 3670 to say 3,400. It is possible that we do that because we will stay within the channel if it does do that before we get any type of reversal. So that's kind of confluent with what Bitcoin's looking like at the moment as well. Even though we're in oversold, Ethereum is backed by a lot of good fundamental news at the moment with the 2.0 and everything like that. So it can sit in oversold and continue up. Now we've got a huge bearish divergence with Ethereum right now, but we've had that many times on this run and Ethereum just keeps pushing up. So I wouldn't let that be my sole reason to short, but it is something that I want to watch for. What needs to follow a bearish divergence in an uptrend like this would be a market structure change. So we could be looking once again, because Ethereum's done this a lot actually in this run, we could be looking at a rising bearish wedge, and that rising bearish wedge again could take us into this zone before it actually has any sort of rejection. Now for Ethereum, the levels to watch are actually where price is right now at the time that I'm filming this. You've got that 2.1k worth of shorts. You can see there as that candle is reducing, they're getting picked up as we're talking right now. So 35.45 is where they're trying to bring price back down, and there's not really in comparison that many buys below current price, but we've also got this level up here at 35.80 to watch as well. So they might try to drive price up there. Again, that 35.80 would be above this wick, which would encourage retail to go long, which would then allow the market maker to short the market using all of our stops as liquidity for their own trades. And now it's disappeared. So see that that's what you call a spoof order. Now it's gone. So it might flash on and off because it can be people just changing their limit order numbers. They might think price is coming down now and they may have moved it down into this level. But when you see that cluster there, so we've got a cluster between 35.35 and 35.40 that's trying to bring price down. Now the reason these ones are flashing, so these ones aren't spoof orders. These are flashing because that's where price is right now and these shorts are getting filled. And you can see that over here in the trade size when it starts to turn mostly red. So down here, it was mostly red and that was these shorts here getting filled. I'm only really interested in the big orders like this 146. I want to know what the people with the big money are doing. And so this shows me here that's a big short order. In comparison, when you look at the green sitting at 14, 21, 42, they don't even compare to 146. So definitely currently as I'm filming this, bears are trying to bring Ethereum down. How far? At first we've got this level to look at, so 34.02, but this is the bigger one here that is a little bit more interesting at 32.8750. Now the other thing to note though is it's currently 20 minutes into the new daily open, and this is what usually happens on a new daily open. You can watch this on a 5-minute time frame. You will usually have price push before the daily open in one direction. So so in this case up, then over the daily open, it has a push in the other direction. So in this case down, then you'll usually have continuation. So just because we're seeing those short orders right now in Binance trying to currently push price down, I wouldn't consider that bearish. We need to see what the follow through is when the actual daily opens in about 20 minutes time. By the time I get this video up, it will be past that anyway. So just for reference, you can come and have a look and see, did this push here before the retracement lead to a continuation up, or did this push down before the daily open give us a change in direction, maybe in that price may come down, the daily opens, and we have a little attempt to push price up over about a 20-minute period, and then we have continuation down. So that's what you need to watch over any daily opens, whether it's London, US, Asia, Australia, any of them, they all do the same thing. So for me personally, I'm not all that interested in trading Ethereum right now. I obviously, spot hold a bag of Ethereum, and I'm very happy to just keep holding it for as long as it keeps moving up. But I am looking at zones where I think a major rejection might come. And for me, it's in this supply zone right now. But as long as Ethereum's price stays above the 10 and the 20 EMA on the daily, I have no reason to exit Ethereum. And for Bitcoin, it's the same as well. So Bitcoin is currently above the 10 and 20 EMA. So I have no reason to exit my spot holds on Bitcoin. And if price did push up to that 50K level, it would clearly be above the 10 and 20 and may come back to retest. As long as the retest stays above those daily EMAs, there's no reason to be exiting crypto right now. All right, that's all I got for you for today. I hope that was helpful. Don't forget, if you are wanting to dive deeper into order books and trading liquidation levels, I do have a Discord. The link to the Discord is in the description of this video below. And we do have live interactive sessions every week where students get to ask me questions and we can go into more depth on this kind of stuff. Have an amazing day, and I will see you tomorrow.